Most traders believe optimization improves a strategy. Sometimes it quietly destroys it. And if you've ever tweaked a system that used to work only to watch it perform worse, this might explain why. What if the thing slowly damaging your trading results is something you believed was improving them? Not revenge trading, not over-leveraging, something that actually feels responsible. Optimization. Most traders never question this. If a strategy works, the natural instinct is to improve it. Tighten the rules, add filters, adjust parameters, make it sharper. And on paper, that looks like progress. But here's the strange part. Sometimes the more you optimize a strategy, the worse it performs. Not immediately. At first, the numbers actually look better. The backtest improves, the drawdown shrinks, the profit curve smooths out. Everything suggests the system just became stronger. But the market doesn't care about your backtest, and this is where something subtle begins to break, because every small improvement you make is based on something that already happened. A losing streak you didn't like, a drawdown that felt uncomfortable, a trade that should have been filtered. So you adjust the rules to avoid it next time. And the change makes sense, at least when you're looking backward. But the market isn't backward, it's always moving forward. And when you build rules around past pain, you slowly shape the strategy around conditions that may never repeat the same way again. So the strategy becomes tighter, smarter, more controlled, but also more fragile. A simple system can survive different market environments, but a heavily optimized one often survives only the environment it was built from. And when conditions shift even slightly, performance starts to feel strange. Signals appear less often, trades feel late, opportunities seem missed. The system still works, just not the way it used to. And that's the moment where doubt begins. Not loud doubt, quiet doubt, the kind that slowly erodes conviction. Because the strategy you're trading now is no longer the one you originally understood. It's a modified version, layered with filters, conditions, exceptions, each one added to fix a past problem. Individually, they made sense. Together, they changed the character of the entire system. Most traders miss this part. Optimization rarely breaks a strategy instantly. It slowly removes the conditions where the edge used to exist. Imagine your original strategy would have taken 10 trades, 6 winners, 4 losers. Nothing special, but profitable. But one of those losses felt painful, so you add a volatility filter to avoid it. Now the strategy takes 7 trades, 5 winners, 2 losers. The backtest improves, the drawdown looks better, so it feels like an upgrade. But what you don't notice is that the filter also removed 3 profitable trades, trades that didn't look important individually, but together they carried a large part of the edge. You avoided one painful moment, but quietly removed a piece of the strategy's profitability. And because you optimized around the worst experience, the improvement feels emotionally correct, even if statistically it isn't. This is where optimization stops being analytical and becomes psychological. The goal slowly shifts. Instead of building a robust strategy, you begin trying to eliminate discomfort, eliminate drawdowns, eliminate uncertainty. But those things are part of trading. No strategy escapes them, and the more you try to engineer them away, the more complex the system becomes. Complex systems create another hidden problem: execution friction. When a strategy has too many rules, clarity disappears. You hesitate before entries, you question signals, you second-guess exits. Not because the strategy is bad, but because it's no longer simple enough to trust instinctively. Confidence in trading rarely comes from complexity, it comes from understanding, and understanding usually lives inside simplicity. Think about the first version of your strategy, the one that originally worked. chances are it had a clear idea behind it, a specific market behavior, a simple edge, something you could explain in a few sentences. You knew when it should work, you knew when it shouldn't, and that clarity made execution easier. But after multiple rounds of optimization, that clarity fades. Now the system only works when several conditions align, conditions that may or may not appear the same way again. So when results start slipping, the instinct is predictable. Optimize again, add another filter, adjust another parameter, fix the newest problem. But every fix makes the system slightly more delicate, slightly more dependent on specific conditions, slightly harder to execute without hesitation. Professional traders approach this differently. They don't chase the perfect strategy, they protect the stable one. Instead of asking, how can this perform better, they ask something else. How much complexity can this strategy survive before it stops being reliable? Because robustness matters more than perfection. A strategy that works reasonably well across many environments is far more valuable than one that looks perfect in past data. Markets constantly change, volume shifts, volatility expands and contracts, behavior evolves. A fragile system breaks under those changes, a simple one bends and adapts. This is why experienced traders often resist the urge to constantly optimize, not because improvement is bad, but because every change has a hidden cost. Sometimes the strongest version of a strategy is the one that's already working, not perfect, but understandable, executable, stable. Trading rarely rewards perfection, it rewards consistency, and consistency comes from systems simple enough to follow, even when conditions feel uncertain. So the next time you feel the urge to tweak your strategy again, look carefully at the reason. Is it solving a real structural problem, or just trying to erase the memory of a painful trade? Because sometimes the most disciplined decision a trader can make is not improving the system, but leaving it alone. Not every weakness needs a fix, not every drawdown needs a filter, and not every strategy needs more complexity. Sometimes the edge was already there, and the real skill is knowing when to stop touching it.